All right, welcome everyone. My name is Andrew Faldy, and what I want to do for the next few minutes is tell you about what's working now. And the word now is a very exciting word, but the context of the word now for us is what's been working over the past year, and even further back than that. So there's some of these things that have been working for many, many years, and they're still working right now. And then there's some things that are definitely standing out as the best right now. So I want to show you what I'm doing, how it works, the exact specific rules. And these are not like ethereal conceptual rules. This is like nitty gritty exact rules that if when I give to you, that you and 10 other people can follow them and get the exact same outcome. Okay. If you're using the same size, same stock. And that's where you could tweak it. You could pick some different stocks. You can pick different size. But generally, you should have the exact same results as anyone else. That specific of rules. Okay. For many of you, you've not been with me lately or ever. So just a little reminder that this is not advice. Okay. This is education. So when you want advice, you need to go to a financial advisor, an investment advisor who is registered in your state or where you live, who has specific requirements to be concerned about your very personal situation. Okay. This is general education for a general audience for you to take and use. All right. So the goal that we have first, kind of in this meeting specifically, but generally, overall, as traders, we have a very specific goal, and that is to turn rough markets into smooth growth. We have to take markets that look like this and turn them into results that look like this. And we're taking inconsistent markets, markets that sometimes are smooth and steady and growing, and everybody just says, well, see this, if you just buy and hold, it's a wonderful experience, and then turn on a dime and crash on you and then recover violently and chop you all over the place and eventually get back to where they started. And that's a rough ride. So we need to take rough markets and turn them into smooth growth. You have the edge. You have the absolute possibility and probability of just buying and holding and making money. So the point of trading is to smooth the returns. And when you smooth the returns, you can trade bigger. And when you can trade bigger, you can obviously make more money and compound faster and grow. All right. So that's what we're trying to do. And that's what I want to help show you how I'm doing it, how others are doing it that I work with, and how you can do it too. So today I want to show you what's working now, what I'm going to do next, and that is the precise rules you can also copy. And I can tell you this, you will walk away and then next week, or maybe even later today, certainly by next week, something will happen in the market and you will know with certainty and say, Andrew's system just bought that. When I say Andrew's system, I mean, that's me. My computer just bought this stock at that price. He's in this trade. And you will be able to follow along and see exactly how it looks. And I'm going to show you how you can follow it on your own for free. I'm not selling you a signal service or a subscription or proprietary system or anything else like that. I'm absolutely giving to you something that works that you can use. All right. And I'm going to share with you at least 5. I had to pick a specific number. I think specificity is a good thing. So I'm going to give you at least 5, and I have 5 specific that I've pulled out. You're actually going to get a lot more than that. So several specific setups I'm interested in right now, and many more that I'll actually be in. So it's not like I'm only looking at 5 things. I have 49 different things going on at once, and I can be in any of them or all of them at any given point in time. And 3 ways to quickly become a more consistent trader. And consistency is that smoothness effect. Consistency is what we're looking for. It's not impossible for even the worst trader in the world to experience profits. The problem is when the profits don't outweigh the losses, or they're not consistent enough, or the size of the wins and losses are inconsistent and erratic. So I want to share with you 3 specific takeaways for you to think about that I believe are not exactly common knowledge or commonly talked about, just something a little bit unique for you to take away and think about. And then in the 7 steps to fully automate your trading in 4 weeks without coding. Often automation and algorithms and all these terms and ideas, conjure up ideas of learning Python or JavaScript or something else. There are simple, powerful, and yes, even free tools to automate your trading in a very short period of time that you can use. Basically, I explain it this way. If you learned how to trade, you can learn how to automate trading. Okay, trading's not the easiest thing. I've said this to options traders. If you've learned options trading, learning automation is going to be a breeze. All right. And also at the end, I want to give you a special invitation to work with me one-on-one directly and trade these strategies I'm going to share with you in my account, my proprietary account, for a cut of the profits. All right, so I'm going to talk to you about how to do that. And during this, if you're logged in now to Zoom, this is actually live. This is not one of those webinars where you're not really sure if it's live or not. This is actually live. So you can ask any questions you want along the way. Or if you're watching a recording, that's clearly a recording on a web page, you can email your questions to me. All right, let's hop into it. I want to talk about results. And this is the kind of the fuel behind what we do and what we talk about. It's one thing to talk about edges and strategies and ideas and examples even, but it's very important to understand what the results are and have been for what we're talking about, so you know how much credence, if that's the right word, to give this, what I'm sharing with you. All right. So right now, and this is since I've been implementing these systems that I'm going to share with you, I'm annualizing over 50% in my fully automated account. I don't know if I can do this real quick. I wasn't planning on doing this, but I'm going to do it anyways. So here's a quick little, oh, my screensaver's on. All right, so that's it. I have it over here. So I'm on a different computer on my laptop, and that's the fully automated system that runs all the time. All right, so I'll get rid of me now. Get back to this. I grew a $90,000 account from October of last year to January of this year. I grew a $90,000 account into $220,000. Okay. I don't know if I said October, November, December, January. Yes, 4 months. So in 4 months, I took a $90,000 account and grew it to 220 in 4 months, trading the signals manually. So I have two different approaches I take. One is the full automation on the big machine that I showed you. That's where I've got 49 different things running all the time. And then I take a few of the names that I really like, and I'll slow the signals down, even do a little bit of discretionary trading with it. But with that, I had some very, very strong returns from that. So here's the screenshot from TD Ameritrade's website. And you can see the ending balance 210. Beginning there is October, under 100,000. End of that actually was much higher, is like 220 or so, dropped to 200. And actually, for fun, I think I have it open. Here's that account right now. A set of accounts, really. It's actually at 231 right now. So it's still working. You can see a lot. There's a lot in Bitcoin, a lot of their positions there, but currently is at 231. So that screenshot there was last month at 210. So still working. Tim 10 Ike joined a meeting last month. He joined our group, started trading with actually he's done other training with us in the past, purchased automation, learned automated trading, learned some specific strategies from us. And he started implementing what I'm going to share with you today last month, January 2021. If you're watching the recording, that might sound like a long time ago. Right now, it doesn't sound like a long time ago. So it started very recently, 2021, and made over $9,000 in the first week going live. And this is the, he sent me a screenshot. So here's all of his positions, and he's got like 20 positions, and they're all in the green at the same time. So that was pretty cool. And Preston Gerard, if you've heard of him or know him or seen any presentations with him, read his blog. Preston hired me in 2012 to learn automation, and he's been consistently profitable ever since and trades funded accounts with his systems. And that's Preston there. All right. And then also I've had over 1,000 students. I don't know the number. It's not in the hundreds. It's over 1,000, could be thousands. I'm not really sure. It's just as far as in what you call a student. If they were, came in for a month or bought a course for me or somebody else where I produced a course, anywhere like that. a lot of people I've worked with. And so I've had a lot of experience helping traders. And I've countless stories of people becoming profitable who were not before, people who had lack of clarity and had nothing but confusion, having a rigid, good, systematic way to approach markets, who actually did it and became profitable. And many of them also became funded traders, either through proprietary trading or raising money from family and friends or investors. All right. And I believe there are too many ideas, strategies, and tactics taught with no evidence that they work. And I think it's a sad thing. So I just want you to know that this is really working. Plus, I'm going to show you the hard numbers of how they work and how everything works. Okay. So please, I hope you see this as like there's a lot of value behind this. This is not a research report. This is a report on results that I'm inviting you to participate in. And you will see 100% clarity what works, why, and how to start using it. Like I said before, for free on your own, starting today. And why? I think it's important to answer the question why when learning from somebody, especially somebody who's quote unquote giving you something for free. You've probably heard the story of the guy who was tasked by some media business in some news outlet in Chicago, was tasked with the job of taking a suitcase of money to one of the busiest corners in Chicago and trying to give it away for free, and nobody would take it. People are like, they don't believe it. They don't believe it. And so we are disposed to doubt free information. Like, there's got to be a catch here. Okay, so I'll tell you what the exchange is. This is the exchange I'm making with you. I don't want to call it a catch. It's an exchange. I'm sharing because I want to give to you first. Okay, I'll give you something. So I'm going to share with you because I want to prove my value to you before you ever decide to work with me. Okay. And what I'm going to give you only scratches the surface of the strategies and tactics and psychology and symbol lists and watch lists and scanners and investment approaches and option strategies and everything else that we have available. All right. So that's why I'm giving it to you. I want to make this to you we'll call it a resume. We're going to talk about resumes later too, but this is going to be my resume and my audition for you. I need to prove myself first. I think there's a lot of great slick presentations that show a few examples of trades that would have worked out if you had just understood how to interpret the market correctly and do the same thing yourself. And that's the stuff that makes me sad, because I don't see people get results after they do that and they take those programs. So I just want to show you results first, then let's talk about improving from there. All right. And finally, the rules I'm going to share with you came from a study that the $6.3 million study, which means, it simply means 6.3 million allocated to this over a year, made over $5 million. And that's 80% return in 12 months. And normally this would be an unattractive equity curve. Most years you would look at this and say, this part looks good, but that's pretty rough. Well, let's not forget what this is. This is the worst market crash since the Great Recession. All right, the COVID-19 market crash right through March. Does this to you, though, look anything like that on a stock chart? Not even close. Making profits, look at this. The whole crash is about 2 months, a give back of 2 months. All right, in a very steady and incremental way and under control. And then steps and turns around and moves back on with very good consistency. All right. And then here, this is the most regular period that you could expect. If you look at this period of September through beginning of 2021, that's what the market's normally like, just kind of like ebbing and flowing and grinding higher. A lot of sideways motion, a little bit of up movement. And the strategy made more than half of its, or about half, maybe a little less than half, less than half of its returns in a period where the market was quite regular. So it wasn't about just sidestepping a crash and catching a recovery. The recovery ended here. Everything else after that is in the quote unquote normal type of market conditions. All right. So right now I'm going to show you my current list of symbols, a proprietary strategy next to the open source strategy that I want to give you. So I'm going to show you both what I have that you're not going to get today and what I'm also giving to you today. All right, so you can see how I'm really, really, really doing it, and then a portion of it that you can have for free that I want you to start following and see for yourself how it works. I'll share with you what I'm in and what you can do too. And the goal here is for you, like I said before, this is the exchange. I want to give this to you so you can run with it, either just look at it or trade it, whatever you want to do with it. But I want you to see for yourself what can be done with a simple system. All right. Simple is, that's my humble word, that it's simple. And when I talk to the traders who I work with, and we describe it like, oh, it's so simple. We just talk about the one element of it that is so simple. And then we remember, well, don't forget, you have to use this time frame and these stocks and this filtering and the diversification, the sizing, the scaling. Okay, it's like, oh yeah, there's all these other things too. All right. But it's at the heart of it actually quite simple. So that's the humble word. The not humble word, the kind of bragging word, okay, would be elegant. You want something that's elegant. Something that's simple and beautiful is what we call elegant. And it's because all the other noise and messy stuff has been removed. And what's left is simple, but because of its simplicity, makes it a beautiful thing, makes it a very attractive thing. All right. And we'll highlight at least 5 setups that stand out, but you're going to have a lot more than that. All right. So now let me get into that. I feel like I don't like a lot of slides. Let's get right to work. All right. So let's pull this up. So this is my non-live system, but this is where I can break it and let it freeze and stuff like that. So just going to scroll through, see if I see any new names. Yep. Welcome everyone. 1+7 Pro is in. Stefan. Pablo, I haven't seen your name in a while. MB. Lots and lots. Okay, very good. Just looking for some names I recognize but haven't seen in a while. All right. So like I said, this is the list. And so right here, this 2021-02-10. It's actually from 2 days ago, but this is my copied over from the big machine I showed you a minute ago to this platform so that I can walk through these with you. So this is the symbols I'm trading live. I think there's 49 of them. And then at the top here is my proprietary system that you can get. All right. So this is the one, if you just want to like know what am I getting at here, I'd love for you to have this. All right. If you like this, then you can come get this. All right. So, but I'm going to share this one with you because this is the one you can have. It's simple, effective, and very good. And then there's this one here, which is proprietary, that you can also have. All right. So there's a lot of ways to do this, but I think the way to kind of just make sure we're not just cherry picking the best is we'll just go alphabetically. All right. So I've got Apple up, and Apple's always a good one, right? So this is a 60-minute chart, by the way. And what would help too, because many of you, well over half of you, are not normally in our meetings. Let me just put the indicator on here so you see. Indicator is the RSI, but we make one little change to it, almost 2 changes to it. We take the 30 and we just make the line at 50. Okay. There we go. So we don't do 70 and 30. We do the standard RSI signal, but we're using a 50 level instead of 70 and 30. All right. And so we're looking for a shift across 50 is strength. The shift below 50 is weakness. And that's the simple part. All right. What's not simple is, there's a million different ways you could do it, optimize it, and use the 70 and 30 and overbots and all this kind of stuff. The simple part is you can just use the RSI as a filter to buy and sell. The other part of it is the stock selection process is very important as well. You cannot just do this to anything, and you cannot do this with broad-based ETFs and expect a similar result. And I want to bring that up right away because I don't want somebody to just turn around and start trading this on ES, the E-minis or SPY or something like that and expect a good result, because you're probably not going to get a good result. It's 4 specific names that meet the criteria. All right. I have 49 that I'm using. There are about 300 out of the universe that are very attractive for it, and that could be traded. Okay. So what we'll do is, and so I told you it's a 60-minute chart. And we'll just use like a context of like the last month. All right. So we'll just, a month is a good amount of time. Just, one consolidation period or the most recent one or two trades, not as important. But how's it done over like the last month? That would be a good definition of now. And then we'll also pull up a report that shows you how it's done over several years. Okay. And then sometimes, not every single time, but sometimes I'll go back up to this proprietary one and then just show you the difference. We'll just contrast it and show you how this one just does a little bit differently. Okay. Um, so here you can see this is where we are now. And then these are hourly bars, like I said. If you're not used to looking at how this works, the little tiny blue arrow, which is kind of hard to see, right there is a buy when it's an up arrow. And then here's another, I guess they're all up arrows on this version here. Up arrow here, sell. So this is the trade point. Excuse me. And there's the entry there, and then it connects over to the sell. If the line is this bluish green color, that means it was a profitable trade. If it's red, like this one, that means it was losing. You bought here and sold here, which was maybe a penny below. All right, and here probably a few cents below. So it was below the entry, so it's a loss. So it's colored red. This one's a win, that one's a loss, this one's a win. Okay, so you can visually see that when the RSI crosses above, you buy the open in the next bar, and you hold it until it crosses below. Talk about simple. Here's for anyone saying like, okay, that's pretty simple. There might be two reactions to that. One is like, are you joking me? Like an RSI crossover? Like, is this what I'm here to learn about? And then some of you are like, man, that's awesome. This, okay, I want something simple. Something simple should work. All right. For some of you to be concerned about, is this all you're going to show me is RSI crossover? No, I'm going to show you some other things too. Like I said, stock selection, all these other things. That said, I bet you I could tell you about this and show you how much it works, and I could go on and continue to be profitable with it. I can give you this list. You can go on to be profitable with it, and or go on to trade it. Most traders would still struggle to actually generate a profit with the same knowledge. And the reason is it's hard to execute. So how could that be so hard to execute? Have you tried before? Many of you should immediately recognize and understand, yes, I know what you mean. When I had a very clear, good set of rules, I did it for a little while and then I stopped. For one of countless reasons, I stopped. And then I went back and looked at some point in the future, months later, years later, went back and looked and realized if I had just kept doing that, I would have been profitable. All right. Usually what happens is one of many things, a loss, several losses, a new shiny object, a new indicator, whatever, comes into your mind, comes into your world, and pulls you away because the realities of what I call stacking bricks in trading is not as exciting. All right. But if you can just stack the bricks, and that means just like you would see somebody physically stacking bricks. They just go grab some, come over and stack them, go grab some, come over and stack them. Sometimes the stack falls over and they got to clean it up. That's not very exciting. But what happens sometimes is a very exciting thing happens. You hit a milestone, you hit a big profit. And over time, you get the result you want, which is to build a house, build a building, build a cathedral. Okay. So this is a brick stacking type of strategy. This is not easy to do. It's tedious, but it works. All right. And I'm going to talk to you about how to remove the tedious part here in a little bit with the automation part. All right. So here's a win back here like that. Let's pull up the all the stats here. I don't know how much time frame we're going to have on this. All right. So this is the, am I on the right strategy? Yes. Okay. This is the last 2 years of trading RSI crossing the 50 on the hourly chart on Apple. That's the equity curve. Did you expect to see that? Well, first of all, many of you may not have even thought to want to see an equity curve. I think we're so inclined to expect what we've seen before, which is just a few exciting examples. I don't want 1 or 2 or 3 exciting examples. I want to know what happens if I do this 100 times. Well, here it is. The last 140 something trades, looks like 142 trades, generated a P&L equity curve that looked like this. Let's go look at what the stock looked like. Okay. The stock was similar over that period of time as far as smoothness. But remember that opening slide I shared with you about turning roughness into smoothness? You know what I don't see on here? I don't see this on here. Okay. I see some give back here. I see the big wins here and this drop. But this drop here almost gave back the entire win. But what's this drop do? Not the whole win, less of it. This strategy, as simple as it is, turned a rough-ish. This is actually pretty smooth. It's pretty good. But as for comparison's sake, rougher data, rougher market, less consistent market, and generated a more consistent result. Okay, that's cool. By the way, I've been trading most of these names for, I'm going to say 80% of this list has been live for more than 8 months. Okay, so what you see here in this is not just backtesting. I think that's really important for you to know and understand. I'm not just showing you something I studied as of last week that would have been great if you had been in it. This is what I've been in for a while now. This has been working. Okay. Some of the strategies are based on stuff I taught Preston in 2012 and have been using since. He's been using since. He was the one that was more consistent than me for several years in that. And I have to give him credit for kind of dragging me back into automation. Thank you, Preston, if you're here. And so that's the important part of this. Okay. This is not just as of today, what would have been nice last year. Okay. AMC, heard of that one? All right. I don't know. Yeah, this may not even be a great equity curve, but this is, it's not even pulling it up. Oh, I see. I have to just do this real quick. No. Oh, I see. I had to load the data. Hold on. When I'm running a Zoom meeting, it loads just a little slower. All right. Heard of AMC? Yeah, that was one of those short squeeze stories. All right. That's the short squeeze story right there. But this is something that actually was profitable prior to that. I added it to my list as a turnaround play, as a post-COVID. So here's like, this is into COVID. And then here, actually right in here. So actually, it was just really beat down. It wasn't great, but it was really beat down. And I believed it had a big potential for recovery. So I started trading it. And actually, I was in that trade, not because of, reading Reddit or anything or following short squeeze names, just because it was a turnaround name and something that had been profitable. And I started trading it and just happened to have a good win out of it. AMD is another one. I'm mostly showing you the one I want you to take away with. Okay. The other one I use, it scales out. So it has a really cool scaling out technique to it. Is the main difference. All right. AMD, this is stock, hasn't been doing much lately. All right. If we're going to use like that 1 month, over the last month, not really much. It's generally down. But over the long term here, very solid. This would be one I'd pull out for you if you want to write down names. I think this is a great one to follow. Equity curve's fine. It's not incredible, but as a basket, part of a basket, could generate some big upside. There's just a lot behind AMD fundamentally, what's going on in the world and how they fit in. And on a, we'll call it technical basis, it's not done much lately. People aren't talking about it. It's not making headlines. And sometimes that's right before some really cool things happen. And I'll be able to show you that with some other names that you've also heard about lately, but I'm going to show you what's going on before them and why most people weren't talking about them until the move happened. And you don't have to be a part of that cycle anymore. All right. Amgen is going to load. All right. Amgen, this is a really good one. This is different than a lot of the other ones as far as all right. Not an incredible equity curve at all. Okay. Like I said, I have 49 symbols going on. Adding Amgen, an equity curve that looks like that, into a basket of 49 things actually improves the equity curve. It may be hard to believe because the randomness of the returns and when the profits are and the outcome of profitability actually creates a stronger return on a portfolio level. But here's a cool part about this. The stock is sideways since last April, right? But look at these big moves it catches using the RSI crossover. Crossover here, buy, ride that move up for a big win. And what all the way down, you're out. Okay, not all the way. You try once or twice on the way down, but during these just hard bleed offs here like this, you're out. You're not in it. During this entire move from here down to here, you're out. You're not in. Okay. And looks like you had one or two attempts that didn't, and then you ride this one up. Okay. And then comes all the way down. What? You're out. It's beautiful, right? So it may look like a momentum system, but it actually has a mean reversion range trading element to it because this is just a big giant range, right? Over that period of time. Well, for it to get back up to the top, a short-term indicator like RSI would need to turn back up. Okay. So you may not catch the bottom, but hey, I don't want to try to catch that, thinking that's the bottom or maybe that's it, or I'll get in a little early or, just wait for the turn to start. All right. That's the beautiful part there. Okay. And then let me see if I can pull this one up. Maybe this one's better or not. I'm not sure. We'll just pull it up and look. Here you can see the scaling effect. Buys here, sells a little there, this. But during this, yeah, move here. Okay, it's just scaling out. Let's just see what that one does. Yeah, it's not any different. Just not the best. I'm more in this because it shows a little bit of edge, but I just think there's some big opportunity for it in the future. And this is my way of doing it without just buy and hold. All right. I debated, just taking screenshots, but I think there's just something to be said for interacting with the charts together. Makes it a little more real. We can drag things around, take a look at different angles of it. But the downside is it's got to load. We'll just pull this one up. So that's a year and a half. So there's Amazon. This is the proprietary one that does some scaling, but it's using RSI. So when I say you'll know what I'm doing, the standard RSI is part of this, and then it uses a scaling out approach as well. So that's what's going on there. Has a little bit more filtering to get in, and then scales out in up to 3 different increments. I just said 2 years, right? Shouldn't be that hard to get. That's interesting. It's weird it brought one, but not the other. So we'll just move on to the next one. Apps is one I really like. I like it because it's being nice to me. That's what I should say. So I don't want to say I like it because I think you should get into it. Apps is one I really like because it was one of the best examples. Our group, we studied last month in January, a way to filter for new names and bring them into your system. We did that. Apps came up on the list. I put it on, started trading it, and caught a big win. And it was really nice. When I say big, it may not look big, but like on a percent basis, it's a big one. The buy here is at 60 and the sell is at 85. Okay, so 40 something percent win on that trade. Very nice. Okay, so that's the recent. That's what's working now. Look at that, man. I love this one. So this is, the back test and then add a sample. If you're not familiar with that terminology, back test is never, I'm not doing it now. What would have happened prior to this? That's all theory. Okay, great. What does it look like moving forward? That means what had actually happened after we looked at it and it looked like it was great in theory. The continuation of the history. All right, that's what we want to see. I just really want Amazon to come up because I know people are looking at Amazon. There we go. Here's the RSI back test of Amazon. So that one was the proprietary one's better, but certainly good there. Amazon's one too where it hasn't done much recently, which to me makes it more attractive. If you're gonna just start with something, I'd rather go with something that hasn't really been making any big moves lately and the equity curve is still holding up. I don't know about you, but to me, that just screams. That's where I want to be. Okay. Because things move and then they consolidate and pause, and they move and they consolidate. Sometimes they crash. Sometimes they don't consolidate and pause. Sometimes they correct hard. That's fine. Because if we use a simple filter to get out while they're crashing, crash all you want. I'll ride you back up. Okay. So, or what really on this to make money, it's who cares if it's not going up, something else is happening. It's expansion and contraction. Contraction may be down or sideways. It doesn't matter. But expansion on an hourly basis with a simple signal like this, I'm going to be in it. Okay. If it's doing anything other than expanding, I won't be in it. If it's acting like it's about to expand and then doesn't, I'll have a loss. That's a whipsaw. It's not a big deal, but it's going to be tiny. And you can see that on these charts. Very, very small. Buy here, sell here. I mean, the red lines are almost flat. You buy here, you sell here. You buy here, it's very short-lived, you sell there. Okay, looks good. If you have the scaling one, you have multiple sell points on the way out, and that's great too. All right, ARCT, this is one added recently. Same deal, I got into this one after last month. We studied it, got in. So this was added to the list, and then a couple little losses, and then a nice big win there. And then proprietary version, you can see it's just kind of fanning out, doing lots of different trades as well. But let me pull this up. That's the back test. It looks kind of funny because it starts there. Well, the first trade was massive win. Just kind of barely stair-stepping up, barely making anything. Another big win there and hanging out. Got a chat here. So catch that. Except the chat box is hiding. Where is it? Okay, I was going to stop my, there it is. Yeah, as soon as I stopped my share, it worked. So let me just share it back again. Is a proprietary code part of the automation course? Yes, it is, sir. That is absolutely part of this. So to learn, I'm going to tell you about the steps to automate, the program we have to get you automated. And with that, you are delivered this proprietary code system, as well as some other ones, as well as coaching to come up with more. ARCT. All right, so that's the RSI signal, and then here is the proprietary one there. Okay, so just a little smoother, a little better on that one as well. BBY. At this pace, I don't know if we're going to get to the end of the list. I will take requests. If you want to see something specific, so to ensure that I didn't cherry pick, that somehow right now A through C is awesome, and we're just going to look at those and act like the rest. If you want to see anything else, let me know. NVIDIA is awesome. NVIDIA is awesome. That's one I would want to do live if I was starting out and had to pick only a few names. You got one? Yeah. So Andrew's asking, is this long only? Do you automate on the short side? What I do on the short side are these things. So I have, not that. That's short bonds. UVXY. So I do long volatility. Here's the thing. I'm really, really drawn to. I didn't do this. I didn't share my background. Most people who got an invite to this have known me for a while. But let me give you a little context about why I do what I do now. I came from a world trading millions of dollars, earning big profits, high double-digit returns, doing very well with asymmetric risk trading. And I didn't sleep very well. It was very hard. And eventually I realized that it was doomed for failure. And I'd seen too many close calls. I'd had outlier volatility from time to time where I was just like, man, this is rough. And it could be even worse than this. And so I cut back big time, went on the hunt for joining the world of asymmetric reward, all right, where my risk is much smaller than my potential reward. So I prefer to trade things where I can make multiples and lose small amounts. And long only is one of the important parts of long only is a very simple, fundamental mathematical fact. When you short something, you absolutely can only make money up to the value of the asset. That's 100%. So if you, the best you can ever do is to short it and ride it to zero. And that's a 100% gain. But really, is it 100%? It's only 100% of the stock. You have the risk of something more than 100%. You have that quote unquote unlimited risk. So even that limited return of 100% total possible gain is married with an asymmetric risk. Okay. When you go long only in names like this list you can see here, okay, these are high beta, mid priced names that move well. These are things that can go up 100%. Many of these names have gone up hundreds of percent in a year. So what I choose to do is, let's pretend this is a stock, because there's not a lot of stocks that have done this recently. So we're just going to pretend UVXY is a stock. When I'm long only, I can buy here and sell up here. And if it crashes, I'm flat. You know what flat is? Wonderful. You can be flat here. Okay. Now, what this actually is UVXY, to answer the question. How do what do you do on the short side? UVXY goes up when the market generally goes down. Okay. Generally speaking, like with 90% ratio, correlation inverse. Okay. This goes up when the market goes down. Back to long only, back to asymmetric reward. Why am I doing this? What does it answer your question? UVXY can make multiples when the market drops a fraction. If the market drops a third, that's a lot, by the way, 33%. If the market drops a third of its value, UVXY can double, triple, or more. There you go. So that's what I'm doing there. I also have FAZ up here. Same deal. Market strong. FAZ is getting slapped. And what will you see here on the short side? Here is when you buy, you're short the market. Okay, if you're not familiar with that, FAZ is inverse leveraged inverse financials. Samir, awesome question. I will answer that in just a second. Actually, I'll answer it while I'm waiting for this to load. How does this compare to simple buy and hold? Is there an example of the stock in a downtrend? Here's how it compares to buy and hold. Here's buy and hold. Here's trading. Okay. We are converting roughness into smoothness. We are converting the possibility of crashes, giving us drawdowns, which are a large percent or even more than our potential annual return, and reducing them to a fraction. All right. So buy and hold is extremely rough in the risk-adjusted returns, what we call return on drawdown, or your Sharpe ratio, or your Sortino ratio, or anything else you want to look at, is lower with buy and hold. Your risk-adjusted returns are higher. You can trade faster moving stocks with bigger positions because you have less drawdown risk. So when your return on drawdown is high, your size can be higher. Therefore, your dollar returns, percent returns on your net worth, et cetera, can be higher. Here is, yes, Rich, I will give you part of the stock selection process so you kind of have a better sense of it. But for, many people in here are members, and if I just regurgitated everything I taught them about, they'd be like, what did I pay for if you're just giving it away? So I will give you a part of it just so you have a sense of it and that it is systematic. So FAZ. So you see that when you buy FAZ, you're short the market. All right. Let's have some real fun and go back here. I have to add more time. I'm gonna stick with what you can trade today. So let's start with the regular RSI. Number one, when the market's going up, this is going down, you are flat. There's no position here. Okay. Under here, you're out. When it's turning up, that means market's going down. During January last month, and not even last month, I mean, several weeks ago, basically, market had a pullback. FAZ went from 6 to 683, and you caught a win there. This is not super high beta. I mean, I'm used to much bigger moves than that in the individual stocks, but this is, I want some bearish exposure, right? So most of the time you're flat. That was all that recovery period. This just got decimated as the market went back up. But here's the magic. Here's the magic. All right, so COVID hits, market drops by a third. FAZ triples. Okay, you catch this move, this move, this move. You don't get out at the top. There's a big fast turnaround. So you got to be on a day-to-day, tick-by-tick basis. If you have long systems on, long strategies, buy and hold, etc., you absolutely had gains here when other things were losing. So that's a very important part to see. Even though it ended out at a loss, this P&L spike from 55 to 75 absolutely kept your account value higher while something else was losing. That's a very important part. I love to see that in trading, even though the outcome actually was a little bit of loss on this specific ultra simple strategy, right? So that's what's happening there. Multiples, catching multiples when the market drops a third. That's why I do long only, except when I want to have bearish exposure, I will do inverse names. All right. Also, it helps for IRA accounts, if that's what you're doing as well. All right. I'm looking for any other questions because I want to cover those first. Ian says, Andrew, sorry I'm late. Does this program use stocks or risk reversal? Stock. This is a stock trading right now. That's what we're talking about. Stocks and ETFs. We talk about risk reversals in mentoring, the monthly mentoring, but what this is about is stocks, ETFs, and automation. Any other, so SVXY, and that's not a bear thing, UVXY. Nothing else in here. So number one plan for the downside is go flat. Number two plan is buy UVXY, FAZ in there. Also, do I have any bonds? I don't have any bonds in here. I have bonds in another portfolio strategy, not this specific one we're talking about in there. There's also some options trades we do. I don't do as many. I'm just so busy with everything else that I'm not doing them right now. Just don't feel like honestly, I'm just too distracted to follow them accurately. Would rather fund somebody else to do that right now. Silver would be diversified. Gold is in here as well. Gush is that's actually an oil name. So there's definitely some diversification and bearish trades in there. All right. Roku is a great one. If I want to give you a few more names, as far as like if you actually want to follow this, but you don't want to follow 49 names, Roku's on the list. Apps I told you about. Amazon be a good one to follow. Bitcoin. Bitcoin's actually my biggest position. It's done the best. I've reinvested the most. I've added size to it. And I have a belief factor behind it, but I don't want to just buy and hold it. I actually have some buy and hold as well, but I'm trading it at a larger size. So Bitcoin's one that but it's on a tear right now. So that's why I'd hate to just be like, well, if it just goes back into a whipsaw period, that'd be kind of rough. But this is just a tremendous one. The hard part about this is, let me see if I can add more time. I don't remember how much time I have on here. Yeah, the weird part, the actual instrument GBTC back tests terribly back here. But and the other part is during much of this time, it actually was going down. But when it's been going back up, it's really strong. Here's a regular one, is actually maybe even slightly better on that one, on RSI. NVIDIA was a one on the list. I've got some on the PowerPoint I'm going to get back to. I'm going to give some other names, but I just want to toss out. Roku is a solid one. I'm mostly thinking about my proprietary ones, but I'll just give you the standard. Yeah, so Roku's fantastic. That's the 3-year equity curve. Let's see how long it's been working for. Yeah, it's been working for a long time. 17, basically since it's been out. So that's really solid. Roku. You can start following. Tesla, obviously. Question is, how do you hedge your automated stock portfolio from possible overnight gaps? What if you're not using UVXY when some kind of event hits? Okay. Yes. These back tests, all the studies. Okay. Number one, I'm not like quintuple leveraged on my net worth. Okay. That's number one. Number two is a lot of those events. Like, show me one. Show me one. Okay. Give me an example and I'll just pull it up. Let's just like, let's look at the example. Let's multiply it by 5 and then go look at the whole equity curve. Do you know the event I'm really trading for is not the overnight, it's the overtime. Okay. Some of these names have gone up hundreds of percent, right? Some of these strategies extract 40, 60, 80% a year. Show me, is there an event where that's going to lose 80% overnight, the whole market? If that's the case, it's not going to be because this strategy failed. I mean, that's every strategy on earth is going to fail. There's no hedge. And that's outside of this. You can do some out of the money risk reversals or whatever you want to do if you want to claim those hedges, but it won't be because of an active hedge. It needs to be a passive hedge. It needs to be the correct size. All right. I spent a lot of time and money wasted on very complicated fear reducing hedges that were useless in many circumstances, and many times big events, huge gaps overnight where they didn't do anything. And then they lose money other times. So the point is correct size, diversification. We got gold in here. I do have short names. Most. Go think the last 10, 20, 100 years. The big headline moving events and all those things that happen, they develop. They are not immediate. They develop. And if you're going hour by hour through the markets, that's how it works. If you want to eliminate all risk from overnight or any potential of loss, you will probably only make 6 to 10% a year. If you want to make 40, 50, 60% a year, we're not going to get rid of all risks. So if you're willing to take risk with me and let it play out for the reward, let's focus on that, risk versus reward. The reward that is multiples of massive amounts of outlier risk even. That's what we're talking about. That's what I'm looking for. All right. Like Tesla, 650 to 850. Caught it. I was in that. Okay. Not because I knew what Tesla was going to do. It's because it made the cut on stock selection. I automated it so that I didn't have to go through all the whipsaws before that. I think this is actually a great one. What happened? Everyone's talking about it during this move. But what was going on back here? Just a whole lot of work. This is the stacking bricks. For several months, the stock's not advancing. It's not moving. Your net P&L through here, because the losses are really small, but they stack up. So there's a loss there. There's a loss there. There's a loss there. There's some gains too. Maybe you're break even. Maybe you're down a little bit. Okay. But you're stacking bricks through there. If I gave this strategy to you with no context, like I talked about at the beginning, of the results that are actually happening from following it, and then you took it and then you started trading, because what happened before this, right? A big win. Okay, so you hear about it. I want to start trading that. Great. Catch it. Yeah, it does work. Look, okay, it's not working as good anymore. It's not working. And then, then it's just really grinding you. You'll be done, because that's right there is old news. That's old news. That's August of 20, man. That's a long time ago, right? That's all. Yeah, man. I don't know why I'm doing this, because it's probably done. It's probably going to pull back. All right. But if you just are strict and follow it, or you use automation, then you can be in the next one, and the next one, and be in this one. All right. So what's cool about Tesla is we're in a little bit of a brick stacking, grinding. You're just doing the work, waiting for the reward type of scenario, and the market's going up pretty good. The market's up and it's not going up. So the beautiful thing, if you use a simple strategy, I want to get back to the regular one for you. RSI one here. Okay. Big win, big, catching these. Now this is just kind of grinding along. If it's below, you're out. If it's below, you're out. If it does start moving up again, it may not go anywhere. It may turn around and take you out, break even, small win, small loss, whatever. But if you want to get in here and get out here, you can't try to guess which one is going to be it. It could have been that one, but it wasn't. That one, and it is. All right. It could have been that one, or that one. There's 3 in there that did not go anywhere. Okay. Is this the difference between that and that? Nothing I can tell you. Nothing I can tell you. So we're going to take every one of them. All right. You want to find a filtering technique? We have been through them. We do weekly group mentoring, and we filter and we filter and we filter and we filter. We improve win rate a little bit here and this and that. But man, it just almost comes out that you're just better off taking every one of them. You wind up giving up more than you get by trying to just get the winners only. I'm going to cover that question in a minute. Good question. So we will be able to cover that. Oh, I think I missed another one. Have you noticed high correlation amongst these stocks? How do you deal with that? No, there's not a high correlation. My live experience, the actual trading, blending them together is significantly better than the individual results. So there's hard mathematical evidence that they are not immediately correlated. They don't get the same result when you do them all. They get different result, a better result when you do them all at the same time versus each individual one. That's one answer to that. Secondly, whatever's winning, like Bitcoin's winning now. That's the big winner. It's dwarfing all other gains right now in the automation. Awesome. Apps is winning big. What? Okay. Don't know that one. What's not? Tesla's not doing anything. Okay. I'm not even in a position. Several months ago, it was the one leading the charge, and then other things weren't in and doing anything. All right. I think NVIDIA is another one that's doing great right now. So, I mean, look at this Tesla chart. And then look at NVIDIA. If this is I'm going from, there's no correlation there. This is screaming. All right. So absolutely, I want to be in all these. And what else is going on? I'm long NVIDIA and flat Tesla. Major paradigm shift. When I say I'm trading this, or I'm in this, or I'm running this, I can be flat it and long something else. Okay. So when this is going up and Tesla's not, I'm long this, I'm not long Tesla. Okay. This is, I bet you any time now, this right there, look at the RSI about to roll over, right? I'm using my finger, like you can see that right here. You can get out of this trade soon. Be just like all those other ones I've been showing you, right? Shop is a fantastic one, Jeff. Just like, almost like cherry picking. I'll send you your check later. Not 20 years, that's too much. I mean, I want it. It just takes too long to load that much. I think PayPal is pretty good. Shop is on where is it? Yeah, there it is right there. It's one of the ones I'm trading. I think it's up, one of those that's up pretty good. Let me go look at that. Yeah, my current shop trade is up 21%. As far as how it's calculating, I remember it's multiple positions. Boom, ain't that pretty? My sound was out and now it's back. Sorry about that. Where did I leave off? Shop, fantastic. Yes, this is just as pretty as they get. I love it. This is one I've added size to. Really, really, really love it. I have to, is he on? Let me see if he's logged in. Mark, it's an alphabetical. I should find you. Mark Robertson's on the meeting. Everyone thank Mark Robertson for bringing up shop. He trades that live in our funded account with options trades. All right, and then PayPal, going from memory. PYPL, what is it? No, that's people. Pay. I've forgotten the symbol. That won't work. What's the PayPal symbol? I don't think I'm trading it. PYPL. There it is. Barely got that one from memory. That's in a big win right now. Let that load. Thank you, Sherwin. You would have saved me if I didn't somehow. I just read the word and thought, let me just take the A's out. That's what did it. Yeah, so this is great. Thank you for bringing this up, Jeff, because it's not on my list, and this gives me the opportunity to show you without any prior preparation something. All right, so it's profitable, but it struggled back there. Fingers crossed for a proprietary one. Better, certainly better. One issue is I got to see what the stock price was back there, 2019. Let's give it some more time too, because it may have. When you zoom in, you know, it's like those big mirrors at the hotel. You know, maybe your wife has one. Maybe you have one. Those mirrors that like really zoom in, you can see like every pore in your face. It's like, oh my goodness. That's what happens when you zoom in on equity curves too. It might look really good or really bad. So it's, yeah, generally it makes money. It's profitable, just not thrilling back here. But it's doing very well here. This is kind of a boring name for a while. That's part of one of our filtering. We do a sort for boringness. I'm just kidding. No, it's one of the elements I like to say is, you know, is this something that's changing the world right now? And a lot of these names, you just know they are. You know, Tesla, Roku, Shopify. You know, they're changing the world. Others are just things that have hit a lot of the other buttons and then moved on. So I'm going to get back to our PowerPoint because we could just back test all day and that's so fun. But let's move on. Specific ideas. All right. If so much noise almost because of everything we looked at, here's a couple I'm going to show. UVXY and Tesla have not been doing much lately. And some of those make, for me, the most exciting opportunities to get into. Oh, sorry. There's some people are using a chat box and there's actual questions being used. So I just noticed that when I switch back. Will you be discussing how you're sizing your positions? Are you using target volatility strategy as well? Target volatility is not included in what we're talking about today. That's separate. So not in what we're talking about. Sizing will be covered in another slide. HB means hard to borrow. And I don't remember what D means, honestly. HB means hard to borrow. So it would be, you would not be able to short it without calling somebody. Andrew, that's funny. That's good stuff. All right. Oh, nobody else can read. I just realized everybody's just typing to me. Yeah, so you can't read each other's comments. Good comparison about looking at yourself in the mirror. Now that I have my glasses, I know exactly what you mean. Yep. That's true about equity curves. I look at 60-year equity curves of trading like the SPX or something. It's like, it looks like a smooth straight line. But then you zoom in on like 1 year and it's just pathetic, absolutely pathetic. And most of these back tests are only a couple of years that I'm showing you. UVXY and Tesla are things that have not been working lately that do work over time. UVXY specifically being hedged. I'm sure most of you make money from sideways or up in the markets. So that'd be a good one. And Tesla, just because it hasn't done anything lately, It seems to be one that it'll just surge every once in a while, creates an opportunity. Yeah, Apple is a smooth equity curve, Calvin. Very smooth equity curve, but not a high percent anymore, like you said. So I like it just because it's so smooth and steady, seems to be growing and just offering profits. But I actually don't have a big size to it because I just don't see it as like a big growth. It's not going to like move my account like Bitcoin can or something. Working now. So those are two ideas that are not working right now that may work soon. Okay, get a market pullback. UVXY can be profitable. Tesla hasn't been moving with the market, can start working later. Here's what's working now and could continue to work or consolidate or drop. But here's the beauty. If you're using a good fast filter and signal, you don't need to be in them when they drop. All right, we've already talked about all these three of these names. Really good, really profitable. My account's grown nicely off of them, and they can continue to work. Here's what's important. I am not a prediction guy. I'm not going to give you predictions about what's going to work, what's going to go up, what's not going to go up, what's going to make the most. That's great for selling commercials on TV and ad space on a website. It's useless for you. Absolutely and completely useless for you. All right. I use some of those. I'll read somebody's predictions, what they think is going to be moving the market, blah, blah, so that I have the ability to go check and say, am I trading that? How's the backtest look? How's the liquidity look? Is it profitable? I go through my list of things that make it interesting or not. If backtests well, doesn't have stupid gaps, I'll add it to my list. Thank you for your prediction. I'm not following your prediction. I'm just going to start trading it. If your prediction is right, I'll make money. If it's wrong, I'll lose very little or none. Thank you very much. Moving on. So these are things that are working now, may work, may not. Bitcoin may go back to 2000. Guess what? I'll be flat most of the way down. I'll get whipsawed a couple times, hooked in a little bit a couple times. That's fine because I'll be mostly out all the way down. If it goes on to a 500,000, I'll be in it. All right. Bonus, because I only told you 5 specific ideas. Here's a bonus. Gold ain't pretty, ain't been working lately. Hasn't worked for it didn't work for like 6 years. It was breaking even on most momentum strategies. It's had some nice surges lately. It's made all-time highs. It's kind of in that category. Hasn't worked lately, like Tesla or UVXY. But man, oh man, if Bitcoin won't keep moving, gold will pick up. That's my feeling. All that said, I'm in 49 symbols and I'm not relying on 5 or 6 ideas. I'm relying on the basket of multiple time frame strategies and symbols in commodities, stocks, ETFs, volatility, inverse ETFs, etc. Okay, that's where I'm relying on future growth. All right, and that's what I want to invite you to learn how to do very specifically. A little conversation on backtests and resumes. All right, what I've shown you for you is backtest. For me, as I look at it, it's a report on reality because I'm in these things and have been in them for many months, some of them even longer. So they're a report. To you, my report is your backtest still. Okay, you're just still looking at this. This is what happened without me. What do I do with this? Very important conversation because some people don't like backtests. They think backtests are pointless. They think it's all curve fitting. It's hindsight, useless. I can tell you from personal experience now, even in strategies I don't trade anymore, when backtests are done without a lot of parameters, without a lot of specificity, with just good, robust simplicity, a good market edge, that they absolutely can move and make money after that in the right direction. And when they don't, you can cut them. When they do, they work. All right. We'll talk about that process in a second. But this little talk about backtests and resumes. I have a question for you to help you think through this. Would you hire an employee because you felt good about them and ignore their resume, especially if it was bad, but either not read their resume or read a bad resume and ignore it just because you had a nice conversation with them? Just because you look at them and say, I really like you. I think you'd be good here. Would you do that? Maybe not. I get the sense a lot of traders approach trading that way. They dismiss back tests, say, oh, it's hindsight. Okay. they dismiss backtest because you shouldn't expect the same thing in the future. Okay, you say so. Um, is that how you? That's not how I treat people. I've generally come to realize that somebody's past is often a good reflection of who they are now and what you can expect out of them in the future. But here's the other side of that: it may not be the same. In fact, it won't be the same. People change a little bit, they mature, they get a little slower, they get a little extra money, they don't work as hard, whatever. They change. Markets change, stocks change, things change. But can you just absolutely ignore the past? No. Just like a resume. A back test is like a resume. It's telling you how it's done before, so you have some sense of if it could keep doing that. All right, next question. Would you hire an employee with a good resume and never manage them? No. Maybe they did a great job. Maybe they were a manager. Maybe they managed a whole business and they did a great job and they got a great resume, got great recommendations. They just had to move out of that town into your town and they're just looking for a great place to set up. And you're like, this is great. They're going to do a great job. And I just leave them to it and never worry about them. I'll just set up auto pay on their payroll and they'll get a check in the mail and I'm sure everything's going to be fine. No, you wouldn't do that either, right? I hope not. Well, it's the same thing with a back test. You take that thing into the real world and you watch it real close. And you decide if it's going to get a pay cut, if it's going to get fired, or it's going to get a raise. And a raise is what we call reinvestment or compounding, or just increasing your size to a higher level. All right. So we're taking what to you is all back tests. For me is some back tests plus some live results. And we continue to move into the real world saying, if it will continue to work, we will continue to give it money. If it will stop working, I will stop giving it money. And with 49 different names, we're doing pretty good. And by the way, I've only had to fire about 2 or 3 of those quote unquote employees over the last year. So it is a good process that we are using. Now, as I said, 3 ways to be more consistent, but more questions are popping in. Those are a priority for us. I'm going to make sure we cover them. Oh, several have come. Okay, here we go. How do you trade GBTC? I thought it requires 6 months holding time. No, absolutely not. GBTC can be traded as any other stock. Okay, you need at TradeStation, you have to ask for permission because it's over the counter, just like any other one. But you absolutely do not have to hold it. You can buy and sell the same day or the next day or whatever. Is automation in TradeStation reliable? What happens when it glitches? Yeah, it can glitch just like your computer can glitch, the internet can glitch. Absolutely. I do not almost, I definitely do let it sit on its own without staring at it often. So, you know, what happens when it glitches? It stops trading. It will hold your positions. So I'll ask you, when you are in a position and you're looking at your phone and you turn your screen off and put it in your pocket, you know, you're not watching your position. So its job is to be far more reliable than you. Okay. And for me, yes, it freezes. This morning I came in and this is not TradeStation, this is Windows. Windows did an automatic restart, which I'm sure I know you can turn it off, but I haven't gotten to that. So I did an automatic restart. So I come in this morning, say, oh, let me go check on my trading machine here. First thing I see is the login screen for Windows, which that means it got shut down. Very fun. Okay, so I got to log in. Glitch, took care of it. Individual charts could freeze. Hasn't happened to me in a very long time. The platform can freeze. Has not happened to me in a very long time. Mostly it's the computer. The computer is what has the glitch as well. I've had more glitches with Thinkorswim than I've had with TradeStation. When the market's nuts and you can't get orders filled, TradeStation's better than them at that. It's just like working when the market's freaking out. So yes, if TradeStation has a glitch, it stops doing its job. And your job as the human is to see that and fix it. So you have to monitor it. Mark, has TradeStation brokerage and platform been functioning well for you? Okay, same question basically. Are you automating anything through multi-charts and IB? I have done automation through multi-charts at IB. I did it for quite a while. It's a lot more complicated. You got more connection points, and it's what you got to do if you want to manage other accounts and collect automated fees. I do teach you that in the automated program, but I don't prefer it. So I prefer when you're going to trade your own money on your own, to use TradeStation. If you want to trade multiple accounts and funded accounts, then you can take all the systems, move them to multi-charts, and connect to IB. But to answer your first question, TradeStation is very good. It's as good as anything as far as just working. I mean, and I've got 6 screens, 5 of them have TradeStation open, 49 charts running. And once a week, I need to restart it. And if I don't, if I skip a week, I will feel it the next week. So basically, if I restart it once a week, I don't have any problems. Jeff, have you built a news filtering option into your automation, such as if there's news event in the next 30 minutes, the robot does not trade? I have not. There are some, you can buy some, I think, as far as earnings. That's an area for improvement. If I want to be honest with you, that's an area for improvement that I do believe will improve the results. I have that information from options studies that I've done, avoiding earnings, improving smoothness and return on risk. So I suspect it would work as well in this. I just haven't added it. They don't have a simple way to do it, so I don't. Calvin, you could run on a virtual server. I already have the big machine, so I use that, but you absolutely can do that. And then you can have access to it from anywhere. I just use Google Remote Desktop so I can look at it from my phone when needed, or just to check on it. Like last week, we went to Disney for the week. So I just used my phone, and I have people who are 1-2 minutes away from my office, who I could call and say, hey, my computer's frozen. Can you go restart it? And I could just walk them through it. As soon as they got it started up again, I can handle it myself. But I was just checking to make sure it wasn't frozen, everything was working, and it worked perfectly and made me several $1,000s while I was at Disney. So that was cool. I used to trade Forex. I use that in my robots. Very cool. I haven't been able to figure out how to make money in Forex. So if you got something that makes money there, let's talk. But I found it much easier to make money with stocks. How much total portfolio do you allocate to each individual equity? You've asked that, so I want to make sure we cover that. And I will on a slide. What is the maximum total portfolio would allocate across all symbols you all trade? What I do, now this I don't cover, so I'm going to cover it right now for you. What I do is I keep my balance lower than I want to be in total size, okay, because I have margin. So I use the margin as my quote unquote size. And I actually over allocate. So if every single thing was on, actually it can't be. I can't be in everything. And I remember I said that a few slides ago and I almost stopped myself, but it was just more of a distraction than anything, so I didn't. I actually can't be in everything at once because it would be too many positions. It would be too much size. So my balance, the deposit that I have, is actually only a fraction of the total size that I want because I allow margin to set my limit. So, and I've done studies on that when you run out of trades, just only keep the ones you have and don't take new ones. It works great. It works fine. So that's what I do there as far as allocation, or what is it? Total portfolio allocate. Yeah. What was the maximum of the total portfolio allocate across all symbols you trade? Yeah. So on a net worth basis, it just depends on how aggressive you want to be and how high a beta names you want, how much history you want, what your objectives are. So, that's an answer for me in my late 30s. That's going to be different for somebody else at a different age, different net worth, different income. So, you can start with 5% of your net worth as an experiment and get going. Or you want to grow rapidly, you do high beta names, trade them aggressively, and use 2 times your net worth. I don't know. It just depends on where you're at, what your income levels are of that. So it's a little hard to answer, but that's why there's such a wide range of answers. Base it off Forex factory events. Cool. Oh, is that the advice you're asking me? That's what you're doing? You're answering my news filtering. Yeah, I need to just dig into that some more. Yep. All right, so let me get back to this. All right, 3 ways to be more consistent. I try to make these a little more unique and also very, very fundamentally true. What I've found over the years is this. Number 1, only think about trading in sets of 10 or more. It's not about this trade. It's not about the last trade you just missed. It's not about this current trade you're in. It's not about if this trade won or lost or the last one won or lost. If you can think of trading as only the results of sets of 10 or more, then you can lead yourself to being more consistent, not changing your mind because of such small amounts of data. If you saw those equity, even the most beautiful equity curves I've shown you today have multi-month periods of time that don't make any sense. If you zoom in on those and you look at those pores on that nose, all right, it is ugly, all right? And you're like, what in the world am I doing with this? This is over. I got in late on this whole idea. I'm an idiot. And you'd be out. And guess what? 6 trades later, it's cruising back in the right direction again. Sets of 10 or more. Actually, I think the number should be higher, but I think if you move yourself to thinking only in sets of 10 or more, and I just really mean that. Like, I hope you've even seen that as I've shown you examples. Like, on the screen is 10 trades at least. I don't say, okay, see where it crosses. I mean, a couple times I said, like, just so you've understood technically what's happening, but I'm just looking at this, like, what's been going on lately. Show me 10 trades. That's how I know what's been going on lately, not just one. If the last one was a loser, I don't care. In fact, we've done studies that if the last trade was a loser, you're almost better off getting in on the next one than normal. Barely. But yes, there's a little edge there as far as risk-adjusted returns only, not total profit. Sets of 10 or more. All right. Number 2, lower the bar and win rate and focus more on asymmetry and diversification. Okay. This was a massive transformation for me from like 2016 on, where a high focus on win rate and focus on specific strategy and market, like the best. I want the absolute best one with the highest win rate and good returns. To now, I don't care about win rate at all. And I actually want to be in all sorts of things. And I actually want them to be simple. But the most important part of this sentence for me is the asymmetry, asymmetric reward. A large number of asymmetric reward strategies all put together, and you will see what you've seen today, where some things are just flying through the roof while other things are flat or losing a little. It's a beautiful thing, and the net results are fantastic. Not in theory, in reality, that's what's happening. Number 3, automate part or all of your trading. And that can be alerts, conditional orders, and full automation. Now, for sake of time, I'm not going to get into conditional orders. If you have Thinkorswim or other brokers, you can set up orders that say when RSI crosses above 50, buy. It won't do it for every trade after that, but it will do it for that one. Then you come back and check. So if it happens between now and when you come back and check, you'll get in. That's nice. Also, it removes that one little element where you second guess and stop yourself. Set it up, let it go, come back and check. You're in, great. Now do a conditional order to exit. Okay. That's a whole, I spent 2 hours explaining all the nuances of that and setting it up and technical stuff, but just know that tool is available for you and you can start researching and getting into that. And the final is full automation, which is where I can help you a lot. And I would love to help you with that. And I've duplicated this slide twice because it was so important. Sets of 10 or more. Don't worry about win rate. Win rate's silly. Asymmetry and diversification will give you a win rate on a monthly basis that will make you happy. It'll give you a win rate on a annual basis that will make you very happy. And it will give you, it will refrain from working well for 9 years straight, only to blow it all up in the end. That's what that really does for you. All right, 7 steps to fully automate your trading, then a specific offer to help you get started on that and potentially even trade my money instead of your own to get started. Number 1, software and broker setup. I highly suggest TradeStation. They have built it for traders, not programmers. Okay? If you understand trading, then you can automate your trading at TradeStation. All right. If you understand programming, you may not actually do as well there because they don't speak the same language as you do. Python, C# and all that. You can probably convert and figure it out. That's fine. Number one, you don't need to know coding to do it because they've built it for you. You've got every indicator you can think of, and all that's there. All right. They also have the broker set up there. For some reason you can't or don't want to use TradeStation, or you need to be somewhere else, multi-charts connected to Interactive Brokers or any other broker they connect to. That said, when you want to learn with TradeStation. It's all in one. It's faster. Your data, your backtesting, it's all just like seamlessly integrated, built together. You're going to get more information faster. Then copy the system, move it over to multi-charts and run it. All right. Oh, that's why early. Okay. So that one was twice. All right. Number 2, strategy rules with edge. This is number 2. Step number 2 is to have strategy rules with edge. And that means you need a strategy that's rules-based that has an edge. Okay. And that could be your strategy, one of mine, or someone else's. It doesn't matter whose it is. All right. And for any doubters, any pessimists, I just want to tell you, there are a lot of things that work. There really are. And there's a lot of smoke and mirrors. There's a lot of technical indicators that come with tons of discretion and interpretation, and they're usually sold by just showing you 15 great examples and ignoring actually what the end result is if you do it 500 times in a row. So I prefer to know, just show me what happens if I do it 500 times in a row. It works. Thank you. Let's move on. Okay. It can be simple. This smoke and mirror stuff, it's not needed. Good, simple stuff. All right. That's it. There's a lot of stuff. There's a lot of stuff that does not work. There's a lot of stuff that's not rules based. Get something that works. All right. I'm not the only person that has stuff that works. Other people have stuff that works. I can help you automate it. All right. But I will give you strategies if you want to work with me. Number 3, model the assets for your strategy and filter the universe to find them. This is going to answer the question that came up earlier about how do you get your symbols. All right. So my strategy is short-term momentum. So it's, and on the long side, almost, more than 90% on the long side. And so what I know about that is it's going to work best on things that move further and faster than the broad stock market. So than ETFs and stuff. So I know right there, I can filter out all ETFs, because even if the back test is good, the returns are gonna be like 5% a year. I don't want that. I don't need that. Especially after slippage. After slippage, you're probably looking at 5% a year. It might be smooth, might be okay. Not thrilling for all the work. So I need things that move. Things that move, by the way, can move for years and years and years and years, right? So what I have found is I can filter out and get a list based on things that have moved without me. And what I actually enjoy about that is I know most people won't get into them just because of that. People have this visceral rejection to, Bitcoin or Tesla or anything. They won't buy it. They won't buy it. They love the idea. They love the car. They love the company. They believe all in it, but it moved without them. How dare that, stupid stock. Nobody told me about this sooner, or I didn't do it earlier. All right. I had somebody, he bought Bitcoin, was $2, $2, 2.00. Okay. Bought it at $2. Put it on his laptop. His laptop died, crashed, couldn't get it revived, lost it. And he had, 10 coins, something like that. Never bought it ever again after that, because it went up to 200 without him. He said, screw you. I'm not getting in. All right. This is where you have an edge. It might be a psychology edge. Might be that the word that traders throw around all the time but never actually use, adapting to the markets. When something's performing, it could continue to perform. It doesn't mean just buy it. I think it's where people get in trouble. It moved up 100% last year, so they buy it. Then they shut their platform down and forget all about it and think, I'll just check back in next year. It should be up 100% again, right? And it's not. Then they're just heartbroken and they say, screw this, I'm never doing this again. Okay, we're not doing that. We're saying, you just raised your hand, showed me a good resume. I will give you a job, but I'm going to watch you closely. I'm only going to give you a raise if you work. I'm only going to trade you if you're going to continue to move up. And if you don't, I'm not going to trade you. And if you do a poor job, I'm going to fire you. That's how you handle it the right way. But when you filter down to things that have already shown their hand as moving well. That's how you do it. All right. Now, the specific steps to that, I am going to withhold that from you. I'm sorry. All right. I've shown you a lot of good stuff today, but I am going to withhold from you the specific steps we use to take 6,000 stocks and turn it into 50. But it's a good process and you can use your own. There's nothing that magical about it. Number 4 is to test. All right. And make sure you include slippage and commissions. But just because it moved up 100% last year doesn't mean it's tradable. Could have gapped up once. Could have had the entire move in 3 days and done nothing since, and actually lost money since then on whipsaw and slippage. All right. Little clue here: slippage and commissions not included in the 7 steps. Very important here. Generally, you want to be in above $10 stocks. Generally, you want to be at 60-minute time frame or longer. When you go under 60 minutes or under $10, especially when you do them both, slippage will slap you silly. All right. If you don't include it, you will feel the pain. All right. So I just prefer to have a little bit slower, 60-minute, a little bit higher price, where you have fewer shares to get the dollars on that you want. All right. Number 5, try to break it. Try to break it. Don't just trust me. RSI 14, hourly chart, great. Make it the RSI 13. Run the test again. Make it an RSI 20. Run it on some other stocks you think will do terribly. See how much they lose, which, by the way, should be far less than the other ones win. And say, well, even if I pick the wrong things, those won't lose very much. I won't add money to them. I will self-correct by using good money management in a very specific way. Start with small size. Don't give it more. Give it less if it's losing money, and then get rid of it. All right. Yes, I'm answering the sizing question here in a second. Not yet. Change the parameters until it breaks. So that's what I like to do. When I try to break something, I actually break it. I figure out where it breaks. Have you ever seen that? Like, they have these machines that test metal, and it's like a big vise. It's like a big robotic vise, and it just gets, and so it squeezes metal, and it just goes, and it's just like a rod. It's like a short, like 1 or 2 inches tall, maybe 1 or 2 inches wide. Maybe it's a square, but I think it's a rod usually. And it'll just pinch the thing down and just add more and more pressure, and be like thousands and then like 10,000s and, pounds of pressure. And finally, like, this piece of metal just explodes, and it's very impressive. All right. Do that to your trades. The first one back here, testing, that's a productive, optimistic process. You're finding things that would have worked. You're finding how it works. You're finding how much it could make you. You get all excited. Number 5, you get to change your hat and say, this is stupid. I'm going to break it. Watch. All right. So you change the mentality. You turn into the pessimist. You turn into the person that says, technical indicators are crap. Let me show you. Then go break it. Go break it. And what you will find is, if it's very hard to break, or when it doesn't work, it doesn't actually lose that much, you'll see all the evidence you need to actually follow the system. All right. And kind of a Warren Buffett-ism kind of idea is like that margin of error. If you have to change it a lot to break it, or you have to just get into really, really dumb stocks that you would never have actually used in the real world to break it, you'll just have even more confidence then. All right. Sizing. Answer that question for you. Simulate or start very small. Start very small, like simulate is $0. It's $0 and you're running it. Okay. Start very small. 1 share. I don't care. Use 1 share. If that's the only way that you feel like you'll absolutely just follow the thing without deviating or getting freaked out, use 1 share. That's what you got to do. That's what you got to do. All right. Or use 1%. The thing, if the stock turns around, goes bankrupt, and is worth 0 the next day, you'll survive. Okay. Start small. Right. 2%, 3%, 4%. Now you're pushing it. All right. If you're doing this with no evidence, not reinvesting profits, you don't need to put in something in one stock, 3, 4, 5%. No reason. There's no reason to do that. So very small, less than 2% per name. All right. Down to 0 with simulation. Jeff, can you test multiple time frame trading on TradeStation, such as if you wanted to have a parameter of RSI must be of whatever, or 3 different time frames? Yes. And actually, I give you a strategy that does that in the course. but you can do that. Did I miss this question before? What strategy works well concurrently with this RSI play? Provides diversification. Some options trade, anything that makes money sideways or down. Anything makes money sideways or down. So your typical options income trades, iron condor, butterfly trades, as long as they're well managed, all that. I don't hate them. I used to be way over allocated to them. And this is where my focus has been since, but those are good things to add when the market gets choppy or sideways. As far as on the downside, your alternatives, gold, bonds, stuff like that. And then on the downside, maybe some asymmetric out of the money puts, not asymmetric, sorry. What's the word? Back ratio trades, those kind of things. Then there's the Q&A box. Sorry, I missed the answer. It'll be in the recording because I forgot, unless you asked it again. Where do you execute automated trades? Yes, TradeStation. You can do outside. It will not automate out of hours, I don't think. No, it won't. I'm almost certain it will not automate outside of normal hours, but you can trade outside of normal hours. It just won't automate. I'm almost certain. Maybe there's some line of code or something you can do to set that up. All right, starting small. Think I answered that question for you? 2% or less, all the way down to 0 is simulation, only more if you're reinvesting. Number 7, most classic of all trading rules and principles: scale out of losers, scale up winners, okay? Or cut your losses, ride the winners, right? But this time, you're not doing it on a trade, you're doing it on an equity curve. You're doing it on the equity curve. So you're checking in. So once you've put it into the market, step number 6, you've got it in. If it's losing money, give it a pay cut. You were at minimum wage before, you're getting even less now. There you go. That's what you do to a loser. So when I say loser, I mean, I want something that's done worse than it's done before. Okay. You should expect losses. You shouldn't cut size just because it lost a little bit. That's what trading does. Okay. Trading has losses and wins. So if it's losing more than it's lost before, maybe it's changed, whatever, the risk is higher, cut the size a little bit. If your size is so small already, there's no reason to cut it. Just leave it where it is and watch it. But if you, at some point, you're just gonna be able to tell, like, the stock is absolute garbage. It's like it completely reversed trends. It's not doing well. I will tell you from my experience, when you go through this process, I've had to do that twice in a year. Actually, the reality of that is I probably should not have been in those in the first place. They were things that I was excited about because somebody else told me, but they actually don't pass my criteria to have them on. They were too low of a price and didn't have any kind of good back test. Penny stocks that were making big moves, and people were telling me the story how they're going to go, up 10,000%. And I said, great, I'll automate it. And then it went back to whipsaw. And after slippage, I was getting destroyed because I was trading thousands of shares. And it's like, okay, get rid of this. So one of them didn't even pass. If I follow this process, the full process that I use of over $10, has moved well in the past, has a decent back test, I have not removed a single one. Can you test multiple time frame trading and trading? Oh, there was a second question. Would PayPal be an example where it was losing in the beginning but winning now? Yes, and I don't mind losing when it used to lose, because things change for the positive. All right. What's another one I'm trying to think of? I can't remember now. There was one, like, the storyline changes. And we're not fundamental analysts or anything, but sometimes, like, it was nothing. It was a nothing of a stock before, and now it works. Okay. Because new products, new innovations, new market trends, and now it's working. And it's been growing over the last year. It's looking really good. If it's going to keep going for the next 5 or 10 years, why don't I trade it long when it's working? That's what I do. All right. Now let's get down to the nitty gritty. I have a program for you that will help you do all of this fully automated, get everything up and running. And I call it the Automated Trading Accelerator. And this is how to fully automate your trading in 4 short weeks. You can take what I spent $20,000 to learn just on consulting, by the way, training and consulting alone, $20,000, and many, many, many months. And then after that, when I spent all that money on the training, I wasn't even given a strategy that worked. Look back on that, little regret. Anyways, I learned a lot, got on the right foot, but then it took me another year to come up with something profitable. That was not very good. So tens of thousands and then a year of learning. I've condensed that into 4 weeks with something that works. And you don't need to learn coding or programming or anything because you can copy and paste the systems that work. All right, how it works, it's video training, group mentoring, and one-on-one. So this is an invitation for us, you and me, to work one-on-one throughout this in order to get this up and running. A lot of it is videos that you watch, go step by step, click by click, all the way through. And it really is. I've had several, what I don't even know now, I think 20, 30 people have gone through the training, and I get almost no questions afterwards. It is click by click. I literally started on a computer with a fresh installation of TradeStation and went click by click on how to set every single thing up. So you can just watch a little bit, pause, do it, watch a little bit, pause, do it, and get through the whole thing very quick. All right. I bought a course not long ago, a technical course, software course, and the guy just showed me his stuff all set up and done with zero instruction. Paid $1,000 for the course, zero step-by-step instruction. It was just like, yep, this is how it looks when you're done. All right, so make it look like that. And then that was the end of the section. I'm like, what? So I'm proud to say this is much more organized than that. So some exciting things about this. You can go, I'm going to give you the link to the website in a minute. You can go read all about it. But here's something I'm mostly excited about when it comes to this. And it solves some of the common challenges people face when automating. And so I'm going to explain those challenges to you and how I'm solving them. All right. One of them, big time, is a fear of getting started. So they do the work. It's a lot of fun. Backtesting is fun. It's like solving a puzzle. It's like playing a game. All right. Games are fun, right? They're fake. They're not real, but they're fun because you get to solve a problem and get a result, get an answer, and it's fun. And then you have this added thing of just like, oh, I can actually implement this in the real world and get results out of it. And so like there's that part of it. So all of it's very fun and exciting, and it's a lot of work, and it's even rewarding. Like there's a reward to like solve this problem of building systems that make money, right? But then they don't do anything. They don't do anything. They don't put the position on. They don't fund the account. They get stuck. All right. So that's one of the big common challenges that people have as they're doing all this research. They actually struggle to pull the trigger. Another one is distractions that prevent them from getting started. So they're moving in the right direction, they're moving on. They get distracted either with new exciting automation ideas or this never-ending desire to make it perfect before it goes live, or something completely unrelated to automation, and they're on to the next shiny object. All right. So distractions is another one. So fear and distractions often stop people from getting going with automation. And then even when they do get started, there's another problem that comes up, and it's quitting too soon if the first few trades lose. All right. So you do everything right. You go through the training, your system's set up, you install it, you got the right sizing, you simulate a little bit, everything's looking good, and you start trading live. And then the market or the technology or just the normal cyclical period of time, the names you happen to pick to get going with, have a couple gap downs like in a row. You get like 2 big gap downs in a row, and you have some losses, and you're like, oh my goodness, I knew this was too good to be true. And they just kind of freeze. And then what's freezing mean? Freezing means stop. So they stop. But you can't stop doing anything. You got to do something. So you just kind of like put it on hold in your mind, and you go back to like the second one is you just look for something to distract you. And that's going to promise to not give you any pain of any kind as you move forward. So if your first experience is pain, many times that will lead you to quitting, or at minimum changing things, which is the last one. And the last challenge that I'm going to list, because there's many, is making too many changes too soon. All right. So it's trading, and then you watch a YouTube video about, um, trailing stops, okay, or another technical indicator, or whatever, or you have an idea about a fundamental filter, or a correlation filter, or a hedge, and you say, that's really important. I need to add that. So then you start adding it. You start changing things. And you're not given any opportunity for this simple, elegant little thing to just work for you. And as you just hop in and you change things, then you're not gathering data anymore. And when you stop gathering data, you stop being able to prove whether or not your little employee is doing a good job for you and deserves a raise, because you keep changing the job description. If you keep changing the job description, you don't have no clue whether or not it's doing a good job. Let it work. Just let the thing work. That's why I say think of things as sets of 10. Once you're up and running, I think you should think of things in sets of 35 or more. All right. So there's some challenges. So I want to help you overcome those challenges if you choose to work with me, by making all these challenges, as much as I possibly can, disappear and not be involved in this. So I've created what I believe is an amazing solution to all these problems. And that is this: if you choose to purchase the Automated Trading Accelerator, I will take the entire amount of your purchase price for the training, and I will put it into a funded account for you to follow your system strictly and consistently for 3 months. All right. So that it's not the purchase of the training plus the money into the trading. It's all in one. All right. So this does several things for you. It gives you an incentive to complete the process and actually get started. Because now, if you don't use it, you lose it. All right. So now you have a reason to finish the training and go live. All right. So that's the incentive for you to complete the process, because I absolutely want, more than anything, for you to choose to do this and then do it. I do not want you to choose to do it, pay me, and then not do it. That's not what I want. All right. It ensures you don't quit because of some early losses, because you and I will have an agreement that you're only going to trade what has been agreed upon. All right. So you don't get to fiddle other than outside of what would be normal allowable fiddliness, if that's a word. And it allows you to have day trading permission with a small account. It's called a prop firm structure. This, by the way, little technical detail, you put the system in multi-charts to trade at IB through this whole structure. It's a proprietary trading firm entity account with sub accounts. What it allows you to do, you actually have portfolio margin and day trade permission, even with a $5,000 account. Any size account, you can put $100 in and have day trading capabilities, because it's based on the master account, which is a prop firm. Okay. So with that account, and why is day trading permission important? With that, you can actually test. You could put the tiniest amount of size in if you want. And that's actually what I would suggest for you for the testing purposes, is put a tiny amount in a whole bunch of names and let them trade live. And what'll happen is some of them will get in and out in the same day. And if you have 30 stocks, 40, whatever the number is, I don't know what you would be up to, but if you have a lot of stocks running and that happens on the same day, guess what you just did? You just passed day trading permission. Okay. So it usually doesn't happen on one stock. You won't hit the day trading in one day and get triggered. But if you trade a lot of stocks, it might happen to a couple of them at the same time or within a short period of time. So you remove that problem with that. Okay. Also gives you accountability to follow the rules for at least 3 full months without making any changes. That is a major issue. You may not recognize it. You may recognize it from other areas of trading that you've done, but it's massively important. Okay, that I help you use something strictly and consistently for a multi-month period of time, and I would love to help you accomplish that. And normally with a funded account, I do 80% profit splits. With this specific program, I'm going to do 100% profit split. All right. So any gains made during it are 100%, and any losses taken will be taken out of the value of the account, which obviously, as I mentioned before, is the cost of the training. So it's my reduction after that, but your gain on the upside. All right. Beyond that, we can talk about other types of funding and continuing on after 3 months, but this is the accountability, follow through, incentive to give you results and get you moving in the right direction quickly. All right. Fine print, gotta always have fine print, right? We're dealing with money. You have to complete, this is a 4-week deal. It's 4-week training. It takes an hour a day. Okay. If you have an hour a day, you can get it done in 4 weeks. Get it done in 4 weeks. Everyone else, not everyone. Many people have proven you can get it done in 4 weeks. It's not hard to do. I will put a 50% stop loss on the account, which is very liberal. if your strategy lost 50%, you have other problems. Okay. But I will set a 50% stop loss. All right. So if you lose half the account, we'll just go ahead and pull the plug on it. And you must either use one of the strategies I give you in the training, or you can submit something else for approval. But we'll probably lean towards the things that I'm giving you. All right. Worst case in this, you have everything you need, meaning the whole list of things. You go to the website, I'll show you, you have all you need: training, mentoring, tools, strategies, help, support, one-on-one time, everything you need to become a fully automated trader. Okay. And if your initial experience is losing money, you don't have to lose anymore. You don't have to lose your own money after that. Okay. You own the training, you've purchased that, you own the strategies, you own the process, and you have all of that for the rest of your life. And you didn't have to go through that first drawdown period, which may derail you. All right. Best case, you have everything you need, just like before, and you make money right away on the investment into buying everything you needed. That would be really cool. I think that'd be super awesome for you to have just an outlier winning month. The first month, the first 3 months, have a big gain and get a recoup on your investment right away. That'd be awesome. Can't wait to do that. All right. I will at this point limit it. I could probably expand it or get some help, but I'm going to limit that to 20 traders at a time, not for capital reasons, but for simply management reasons and giving attention. So for any reason we run out of that, then what we'll do is I will stop adding people to the training, and we'll just set it back a few days, or however many months are left until a spot frees up. So I will secure a spot for you. I will stop bringing in new people to the accelerator until everyone has their opportunity to go through this. All right. Do you want to raise money from family and friends? Also, little thing here, I want to be your partner in this, more or less. I want to stand by you and take this beyond just what this can do for you individually. So I've done this before with people. They've learned from me, and then they go to their family and friends or somebody they know that has money and who is entrepreneurial and would back them. But it's just them, and they don't feel very confident with it. So I will definitely, if you go through the training and you manage the funded account and you do everything according to the rules, I will definitely write you a letter of recommendation saying exactly what the process. You went through the process of training. I'll explain everything that went into the training and my background experience, how you've matched that, understood everything, took it into the real world, and did everything you said you were going to do as planned. All right. And that will help you out. For some, I've even gotten on a conference call to help them explain how everything works to help them raise money. So if that's the case, for some of you, that's very important to get your leg up in the world of trading larger amounts to earn fees from that. I would be thrilled to help you complete that process. All right. That was actually a slide from the old PowerPoint that I copied to make this one. So that's where we bring it to the end of this. Let me just check the questions here. That one's covered. A new one, I think. You mentioned IRA. Can we set this up? IRA. Yes, you can trade IRA. I have a Roth IRA that I moved over. I had an old Roth IRA at TD, and I moved it over to trade here. And then what I do is I just set it to, I actually do a daily time frame just so I don't ever day trade in it. So yes, you can trade IRAs. Obviously, it's long only, but what we do is long only. Mostly, you can trade short. I will absolutely help you short things if you want to short things. I just haven't done it. I'm not even totally against it. 6 months from now, I may be shorting things too. I've just had enough. I've got enough going on just to get all the upside opportunity covered. that adding the downside opportunity has not been a high priority for me. But anyways, that was not your question, but I wanted to throw that in there. But yes, IRAs can be automated at TradeStation. SEP IRAs, Roth, traditional, all sorts of stuff. You can do entity accounts. You can do authorized trader. So a spouse's account, and then you have the permission to trade their account. It can be set up in the platform, all sorts of cool things you can do. What you can't do that you can do at Interactive Brokers is manage multiple third-party accounts and collect fees. That's a cool part. Could have gotten into that for a whole nother 30 minutes because it's really exciting. You can set up management accounts and actually automate fees, automate percentage fees, management fees, fixed fees for data or anything like that, all automated, transferred from their account to yours. It's a beautiful thing. So that's why I teach you about multi-charts to Interactive Brokers. And I actually show you click by click how to set that up to collect fees. All right. So what I have failed to do, which is a little bit of proof that I'm not a good salesperson here. I don't even have the way to, I don't have the link here. So let me just, I'll just add it. I'll just change this. Learn automated trading.com. All right. My mouse has gone away, so this is like really weird. That didn't work. Come on. Current. There we go. Other questions? TradeStation only, not TOS. Here's what I do. TOS is my manual trading. TradeStation is my automated trading. TOS is some discretionary, some systematic, some daily, some different time frame. So I like to just have both. So I automate TradeStation. I allow that to be the fully systematic. I've even had where I want to do a discretionary adjustment, sizing, take profit, whatever, in the position that's going on. I go to Thinkorswim and take that trade. So TradeStation is, I just let that be my fully automated platform, and TOS is everything else. Calvin, so it's not on TradeStation, but uses multi-charts and IB API. So I'll just re-describe the whole thing to make sure I cover your question and any other related question. What I suggest using is TradeStation alone to get started, especially if all you're ever going to trade is for yourself, all in one. By the way, I have TradeStation does not know who I am. I have no affiliation or relationship with them. They don't pay me anything. I think there's even a way I could refer you to them to get paid, but I don't. So TradeStation, all in one, easy. All right. You would do multi-charts and IB if you had a reason to, okay? Because it's once you add where you have to connect data to multi-charts, trades from multi-charts to IB, now you have multiple linking points, loading the data is a pain, it's harder to set up, all that. If there's a reward that's worth that, then do it. Okay, one could just be, I want all my accounts at one place and they're at IB, I only want to be there. If that's your reason, you can do it. If it's, I have client accounts, I want to manage and collect fees, then that's why you would want to do that. All right, even then, I will still suggest to you, TradeStation's free. You put a minimum deposit in, get the platform. You can even withdraw your minimum deposit while learning. Learn everything, backtest everything, use all that free all-in-one data testing platform, all that. Use the simplicity of that to build everything up and get ready and test it and be ready to go, simulate everything. Then copy the system, move it to multi-charts. They use the same code, so then you can run it over there. Yes, Mitch. Yep, I just happened to answer that. Minimum account, yes, you do a minimum account TradeStation And like I just said too, you can even take that back out. What I did for a while, you know, when I was only using it for back testing and signals in the past. Yeah, I would just leave $100 in and use it. It used to be like $99 a month for the platform and another $99 a month for a radar screen, and like they charge you for every last little thing. You spend $300-$400 a month to have all the tools. It's now completely all free because like that, like them and everyone else, they've gone to the commoditization of brokerage, and now it's just about the finance side of things. So they just want the order flow and deposits. So that's how they're acting now, like a bank more than a technology company. So that means you get their platform for free now. Yep. Yes. TS is now 0 commissions. You just have to pick the right structure. During the learning phase, you pick the one where there's no minimum fee. I can't remember because I'm just active now, but it's such a minor deal. It's not a big deal, but ask them when you're opening, pick the commission structure where it's you actually pay a commission, but you don't pay an inactivity fee, because you got your month where you're learning first, and then when you go live, switch it back where it's free. It takes 2 minutes once you get a hold of them. Sometimes you're on hold for a while if they're busy, but that's life. It doesn't take that long. Jeff, why don't you send me an email about that question on volatility, please? Yep, cool. Calvin's already got the TS account, so we can get your systems fired up. Computer monitors, you only need one. I use 6 because I bought 6 10 years ago, and they look cool, right? You know, no, I actually use I use 5 of them legitimately now because I can see all the charts. I could probably boil it down to 4 and still have to click back and forth a little bit, but I got 49 things going on. I really think if you have 2, you can. I hate to use the word survive. I just think it'd be really hard with 1. 2 sounds like the winner if you're going to do a lot of positions. Just because I don't want to click back and forth. I don't want to like look at the trade monitor and then go back to the charts. I like to just have them where I walk in. It's in a separate room. So I walk into this room where this machine is, and I can, without touching anything, I shake the mouse to get the screensaver to go away, and I can see everything I need to see. Positions, trades, charts, and then I'm done. But like I said, I can get that down to a couple, but 2 is probably enough. And you just have to click around a little bit. All right. This went significantly longer than I planned, really. I think we've had a great time. We've had almost everyone stay on the whole time, unless some people came and left. So that's really cool. So it's learnautomatedtrading.com. Like I told you before, my email address is right here, Andrew@FormaFinancial, or you can reply any of the invitations to join this meeting. Just hit reply. They will come to me. All right. So go ahead. I look forward to working with you based on the number of people in this meeting and the number of people that know about this. I'm sure we're going to get some people started. So if that's you and you want to get started, I'm looking forward to having our one-on-one times. By the way, our one-on-one times are screen sharing. So it's like a Zoom meeting like this, but screen sharing. So we can look at your stuff, fix any problems that come up. So what happens is we do that at the end of the 2nd week and then the end of the 4th week. We'll have meetings, but anytime, I'm telling you, anytime, email. At some point, you're going to get my phone number, my cell number. You can text me. Okay. I'm here to help you. I want you to get to the finish line and do amazing things. And the outcome of that also, by the way, is we'll become collaborators. Preston, I taught him in 2012, and we're still collaborating. I'm now taking ideas from him now. All right. I help him. I answer his questions. He gets in trouble with his code sometimes. It's great. But we collaborate now, and it's fantastic. So I look forward to having that relationship with you. All right, we'll wrap it up though now. You know how to get a hold of me. And I look forward to answering any questions. But go ahead and check it out. Let's see. Yes, we can do that. Calvin, send me, reply to me and send an email So the email you use to log into this meeting or get the invite or anything, reply to me and I will get that for you. Perfect. Mark, let me stop my screen sharing and pull that up. After, oh, you're just saying after this. Okay, I will do that. All right. Thank you all. I think we've covered the important questions or urgent questions. Send any other ones to me and we'll talk later. All right. Thank you, and enjoy your weekend. Talk to you later. See you.